Hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. I'm going to basically give you what you need to know before you go on starting your day. So let's get on with it. Economic data across the pond. We got some Institute for Supply Management type numbers, which is basically factory orders out of Germany coming in at 2.8%, much better than expected at 0.4%. The rest of the industrial production part of Europe really not doing as well, coming in at French manufacturing orders coming in at negative 0.2, expected to be a 0.5, so worse than expected there. And retail sales out of Europe coming in at negative 3, expected to be negative 1. We're going to be waiting for our non-farm payrolls here in the United States. That's the big number we're looking for today. We used to call today Unenjoyment Friday on the floor because it was chalked up to be a crazy day for the better part of the afternoon after this economic data point comes out. So keep your eyes out for that. It's supposed to be coming in at about 100,000 hires last month, 200,000. So we are expecting less, obviously. We are nearing a good employment rate of below 4%. So a lot of those things starting to look good. I think that it's more of a product of folks falling off of the unemployment list rather than getting hired. Yes, we are hiring as fast as we can across the board. It doesn't matter if you are a white collar person or a blue collar person. You are looking for folks to hire at any given moment, and it's not as easy as one would expect. All right, so let's take a look at the overall markets and see what we need to know before we go. We've got gold moving up against this trend channel that we had created during this bit of a rally here. I was expecting, with inflation not being as transitory as everybody was expecting, that folks would be flying to gold and even Bitcoin. We're not even seeing those folks come into Bitcoin right now. This is the inflationary gauge, folks, that is going to hold on as we see the dollar weaken, equities start to fall. It's going to be a flight to safety to the gold and or retainers of value is what we would expect them to be called right there. Now, Ulta I was throwing up here because we are looking at this with the straddle with no upside risk there, basically throwing a covered call on there. I show you how to build that out in this video yesterday that we did, so please go to YouTube and check that out. We also did it on Facebook as well, but straddle with no upside risk. We played that with Ulta here because of the high volatility. Markets in between 2 points of control here, as you can see. So the market's going to want to settle down here and I think build out some volume in and around this 370 area. I picked the strikes on the short straddle at 365 in that video. So please check that out. You'll find out a little bit more about how to set that up. Now, weakening dollar is going to drive crude oil higher. Well, crude oil is driving higher for a few reasons. Basically, the weakening dollar is going to drive this higher, and the fact that we haven't gotten up to the production levels we were at before the pandemic. Remember, we've talked about this with our fracking operations. When they shut down those fracking operations, they don't necessarily fire right back up. So when we were producing over 10 million barrels, almost 11 million barrels before the pandemic, folks, we are below that in single digits, right around 9, great, creeping up there on the 10 million mark, but not quite there yet. So the lack of supply is also exacerbating this move here. And really want to talk about Ulta, I guess. All right, the VIX still moving higher, and we're seeing weakness across the board in equities. Again, Bitcoin, a little out of order here with Bitcoin here. But when we're talking about swing trades and trying to find these types of setups, look at this bottom here. Really nice finish above the Fibonacci, that 50 Fibonacci. That's a place where folks like to come in and start buying. We are down there near that value area low. So if you haven't gotten involved in Bitcoin, it might be a time to enter the markets, albeit very small here at these levels. I would start to look to maybe add a little bit of Bitcoin to my portfolio here. All right, bonds. Value area low, but that's not going to mean a whole lot because about every Fed governor right now is talking about higher interest rates, and some of them are talking about 50 basis point bips. All right, that means when we had Greenspan, we talked to him and he was going to only 25 at a basis point, and he used to go off meeting. These folks are kind of similar to that. That's going to add a lot of volatility to the market if we start seeing the FOMC moving interest rates off meeting, that could really add a lot of volatility to the market going forward. And here we go. We're going to get into the equities, making a bit of a move to the upside here ahead of the open. I don't think that's going to be long lasting. Everybody's going to be waiting for that non-farm payroll today. Now, NASDAQ, after this correction and nice little bounce, what do we have going on here? We are right back to the trend channels that we created back in 2017 and 2018. I can't get the marker to want to really show your highlight here, but these numbers were these lines were generated back in 2017, 2018 on a nice bullish trajectory there. We have found that trend channel again, so very strong. Yeah, it's relatively tight for what we're accustomed to as of the last year with the volatility we've been seeing, but keep those lines in mind as we especially approach the point of control there. It's going to want to calm down. Again, it's where the most time and volume's been spent, folks. So that's going to want to, if we've all transacted at the same price, it has a tendency to not have that volatility in the market as, well, you know what, it's my price. We've been seeing this trade. I'm really not long, or I'm not making money and I'm not losing money. So I'm just about happy where I'm at. And that's what I think we're going to start to see here in the equities. Now, we haven't seen that type of correction here in the many S&Ps, but you can see the value was building up a little bit higher here. And I talked about the correction in the tech sector being a little bit more overdone than probably what we would see in the Dow Jones and the E-mini S&Ps. Well, we've talked, you're hearing all across the board, FANGs and meta stocks are not doing very well right now as we're seeing that correction really come to fruition. Dow Jones, some of those blue chips, like we talked about, are staying elevated. Right now, I think time to maybe start getting involved. Yeah, it looks like we've found a bit of a bottom here. So I would suggest if you're looking to add stocks to your portfolio, it would be looking to sell puts because of this high elevated volatility that we've been having. If you're looking to scale in to buying, selling puts right now would be the thing to do. You can get about another 10% lower. Probably not going to see that type of correction. But having said that, it's like getting another little dividend by selling these puts if you don't get that stock put to you. All right. So that's about it. And if it does get put to you, you've lowered your overall cost basis to a point where you might not have even had to, or might not have been able to actually purchase in the open market. So that would be how I've talked about it. I've even talked to some folks that have been reaching out to me, some financial advisors, and that's exactly what I'm suggesting to them when they're talking about speaking to their clients about this correction. Anyway, that's about all I got for you guys. Hope you have a great weekend, and if you can't take that, take it easy.